Is Jordan with Conquer Trading and Investing. If you're new here, welcome. If you're not, welcome back. This is a fun Friday session. Nevertheless, we're going to go ahead and do what we do best. We're going to put the work in, make sure that we walk away with a sharper, clearer awareness, and make sure that we stay on the right side of the markets to conquer the markets. What an incredibly think about that. Conquer the markets. The markets are one of the most difficult things in the world. That's what brought me to them. It was the magnitude of the challenge. What is something I could do the rest of my life that was going to challenge me mentally, as well as offers the greatest potential for financial freedom? That's what I wanted to participate in. That's what I wanted to do. That is what I do. And we navigate markets together. It's a fun Friday, but we got to put the work in. Today, we're going to be taking a look at, obviously, double dip. And a lot of people are thinking we're about to enter into a bear market. We spend a lot of time making sure that we are on the right side. We love to incorporate the macro NTA and above all, our mechanical edge to put us on par with the best of the best that have ever performed and traded in the markets. Think about that for a second. Just think about that. There's no hubris at all when we talk about conquering the markets. Indeed, that is our goal. Greetings, Brazil. Great to see you here on this fun Friday. There's a lot of people thinking that we're about to obviously come to the end of this 4-year cycle. That from now and into the end of the year, we should see some really gnarly upside price action. And then after that, normally a bear market is something that generally lasts about 12 months. The duration of past bear markets have varied from 76% during the last cycle to 84% in the previous cycle and 85% in the cycle before that. So one would think that, okay, we are having diminishing volatility to the downside, and in the coming bear market, maybe we're going to have something like a 65% drawdown over the next 12 months. Now, I don't think that is going to happen because that's not how the macro is aligned. Nevertheless, a lot of people, they're really adamant that, you know what, the markets are crashing, the markets are about to crash. We're going to take a look at that just from a data-driven perspective to make sure that we continue to have the awareness that we need. If you have been paying attention, last Friday, we did a video, and on our Fun Friday, we were covering, have the markets come too far, too quickly, too fast? And I highly recommend, whether today or tomorrow, to watch that video. And that video goes into details about where we are right now, the seasonalities that lie ahead of us, and what our expectations are through the summer and through the first few weeks of September. And I think that's an appropriate thing to do as we continue watching over here. This is just lining up NASDAQ seasonalities to current PA, to current price action. And we see that we're currently here towards the top end of this deviation. And over the summer, from where we are, we're coming off of the best 2 weeks, one of the best 2-week periods of seasonalities. And you could see that, sure enough, price action happened to once again solidify that average. And there's a reason why you see price action do this these particular 2 weeks. And then right now, where we are right now, we obviously see some factors like the constant buybacks as we're entering earnings seasons from corporates. They have gone from $10 billion a day down to around 2 billion. Significant bid in the markets has been reduced. And we're headed into earnings seasons. A lot of people uncertain about what's going to happen. And during this particular period, you can see that price action is flat. Flat means flat. It means it's choppy, And coming out of that, after earnings seasons, a little bit of and then usually what you see is just seasonalities. I'm not suggesting for a second this is what is going to happen. What I am saying is that, you know what, if you ask me what's happening into the end of the year, I think October, November, and December are going to be very, very bullish months. That's the way I'm reading the current situation. Now, if that changes, if we have any technical breakdowns, regardless of what my beliefs are, I assure you that we're going to be on the right side. It's just what we do, like it or not. Now, if you ask me, I do believe between now and the end of September, it does warrant some caution, right? I don't expect that we continue really just like we're at new all-time highs today. It feels great. It's fantastic to be at new all-time high. Are we going to be at new all-time highs come the end of August? Potentially. What I mean, it's nothing suggests that we wouldn't at this particular moment. What about August 1st? We're coming to the deadline of the current tariff situation. Yeah, this uncertainty. There's been uncertainty ever since the April low. Ever since April 9th until today, there's been massive uncertainty. And there always is massive uncertainty. There are a few times in the markets that things are clean and clear. One that I could point out to you was in this particular period. And it was, if we just come back to April of 2020. And in April of 2020, here on CTM live streams, we said, and of course, I'm here to present information. I'm here to present a different perspective to help you form your own, right? That's what we do here. And at that particular time, I was like, you are forbidden to sell. Like buy, it's only buy. You are like, we were just coming off a couple of months, right? Since late January, all of February into March of selling and turning swing trades into position trades. We were selling hard on the breakdown. And then it was like March was like it was iffy. Are we going to retest those lows? That was, and then there like pretty soon over a period of a few weeks, we're finally able to make the transition that like, no, this is up only. This is going to be uber asset inflationary. That was a clear time in the markets. Very few times have that type of clarity, right? And normally what you're doing is climbing that wall of worry, and that's real and that's legit, and that's just the way it is. I've pointed out frequently to you that we currently, coming out of a 20% correction, right now are in the highest deviation out of that correction. That's quite bullish, right? This is going back 125 years worth of data. And the previous time that we are the closest to any deviation is this 1998 deviation, coming off a 20% correction, coming off 2 years of 20% plus gains, and then going on for another 2 years of tremendous gains, ending in the dot-com bubble. A lot of people think this is really poor analysis, right? Not a lot of people. Some people out there think that this is really poor analysis. Nope, not this guy over here. Well, we're gonna have to take a look at MicroStrategy today. A lot of people probably wondering what's going on and where are we going, what's happening. We'll take a look at that in 1 second. But what I'm pointing to and over here and focused on is like the laughing emojis. This is coming off of yesterday's video when I'm like, look, there's a lot of euphoria in the market, but last time this happened is not what you think. And people are wondering, like, Jordan, you think we won't have corrections in risk assets? Ha ha ha, ha ha ha, ha ha ha. Cannot believe you are one of this time is different. Ha ha ha, ha ha ha, ha ha ha, ha ha ha. Check my notes. Wait, we just had a 30% correction in equities. Okay. Checks my notes further. 20% corrections occur about every 4 years. Huh. Ha, ha, ha. Now, this doesn't get like, listen, that's averages. That's averages. I want to take a clean look at you, and I just want to go back to the data and take a look at what's going on over here. I have it over here on closing. Here you can see the wicks coming down to where I have the extent of the correction. But what I did is highlighted for you all corrections that were in duration of 20%. 20% over here, It's Fun Friday. Just sticking to the theme over here. It's Fun Friday. Look, listen, I'll be the first to tell you, I could have a lot of people can't handle this. Everyone part of CTM, I know you are absolutely tough. a lot of people can't handle having expectations and then pivoting. Do you know who's great at that? Stanley Druckenmiller is absolutely great at that. Will pivot on a dime, and you got to be able to do that in the markets. There's no question about that. I was tracking over here, right, and I have to say, I mean, calling the price action during the previous cycle, turn for turn, pretty spectacular until we got to here. And I thought we were going wave one into wave two into liftoff. That was, I would say, probably, you know, 95% convinced, or maybe even 97% convinced, highly convicted that that is what the direction that we were headed. However, when we had a technical breakdown of 53,140, not, I posted it on public Twitter and I posted it on public YouTube because it was such an important breakdown. I said, I'm exiting all leverage trades. I hold Bitcoin and I will always, my stop loss is zero. I'll continue to hold Bitcoin. I believe in Bitcoin, but I am exiting leverage over here. Not only that, warning, de-risk down. If you have any type of loans out there, it's time to, like, something is wrong. This is not right. And that didn't mean that I knew that we were headed into a bear market. But I did know when we broke down 35,000, look, if you didn't de-risk when I told you it's not too late, this is the time to do it. And that's the difference between people who are able to navigate markets and people who just get stuck in, I expect this outcome and I want this to happen. Right before I look at what's going on here with expectations, double dip, correction expectations, I want to take a look at this important question that was asked. That's not it. Ha ha ha. Ha ha ha. This is it right over here. This is, I love when this type of clarification. Fun Friday. Let's kick it off over here. Let's this is very important. When these type of questions are asked, it's the best. I know that when I listen to different presentations, I know when I listen to podcasts, I believe that I hear one thing, and if I re-listen to a segment, I then actually understand that I misunderstood. And that happens often to all of us. So clarification is really, really important. By the way, as we're here today, go ahead, smash the like button, thumbs up, whenever you're having a good time. Whenever you learn something new, whenever you appreciate being here together. Jordan, so thanks for the hard work on everything. I've been watching the videos you do, and I was a little confused at the end of today's when you said there's a probability of buying Bitcoin near $60,000 in 2026. I thought the base case is ending the 4-year cycle, and instead of a slower grind higher into 2028. What do you lean towards? What's the and this is, I mean, honestly, that the question and the way that that is proposed so shows so much understanding, so shows so much nuance. The way that it's expressed, I mean, that's top notch over there. What I'm pointing out over here right now is that, and I want you to follow two things over here. We have this solid line, this line that I've made solid, and I believe that line could be breached. It's been breached a couple of times in recent history. It was breached during the global lockdown crisis, and it was breached during the FTX collapse. Those were two, I would say, anomalies. Those were like those were events that happened. Events like that could happen again, but they were anomalies. And I believe that on an anomaly that there's like easily though that level could be breached. And I believe the wick below, I went as far as the wick below of during the BitMEX feedback loop. I put the lower dotted line. So I think that it's safe to say like that is the area. And I do like to be exact. And I would say where you have this touch and then one a little higher. Let me just go down over there. Isn't that neat? How this touch then forms the low over there. I would say that like that's the level I'll use right now when I explain $60,000 into January 2026. And so I'm going to just look on the right as I go over this line that I'm in, and you can see $60,000 in November of 2025. So I think that the probability of that happening is extremely low. It's for sure possible, but I think it's extremely, extremely low. And I'll give you what I think is more likely in just 1 second. But I want you to understand exactly why I said and I love how you use the word the possibility, right? Is that the word you used over here? You said, um, but no, you said there's a probability. I should have just said possibility rather than probability. If I said probability, this is where the confusion stems from, and why this is where the confusion stems from. If I said probability, I should have said possibility. There's a possibility. It's a very low probability that we could trade. And I'm going to go over here. $60,000 into by January of 2026. I don't think that's a possibility any longer. Now, the possibility then becomes if something's wrong, like the structure is broken, something is way wrong. Maybe at this point in time, we've entered into not a slow motion deflationary bust, but like something like I don't think that's in the cards or anything like that. So I think that really clarifies like beyond January 2026, 55,000 Bitcoin is cheap, 55,000 Bitcoin is gone. I don't think that you ever see it again. Yes, the base case is that throughout 2026 we continue to see that slow walk up and hopefully within the sustainable channel. I like my best hope is that the longer we continue in the sustainable channel, the better. And that's great. So what I think is more probable of a low between now and January 2026 is this line all the way up here. So I'm going to say $96,000 Bitcoin. I think that, and I'm going in and highlighting this. You all are familiar with this because this is the sustainable channel that over here. And to be even more accurate, that's as accurate as we get. That's the same exact level. What I'm looking at over here, this line is the invalidation of the bull market. And we've held this line. We've held this line since the bull market breakout at 17,250. It hasn't broken. It shouldn't break. If it breaks, something's wrong. I think that is 96,000 for me is the low of what my expectations are going to be between now and 2026. So for the next, 16 months, that's a pretty significant projection, and that's not far away from market, right? That's very close to where we are right now in market. So hold on 1 second. I got myself confused. Let me come back to this one over here. So that's not a big drawdown. That is a big drawdown. That makes a lot of sense. A 30% drawdown. Like we haven't seen greater than a 31% drawdown this whole cycle, and we shouldn't. And if we do, something's not right. Probability suggests that's what we'll see. It does not mean that it's an absolute. For sure, I believe that you all understand that, and if you don't, I'm just clarifying here. I'm not saying it's impossible. I'm saying if that happens, that's a technical breakdown, de-risk, something is wrong. And when I go ahead and say that in real time, like, take me serious. Like, no one in CTM likes when I say that's technical breakdown. They don't like it because it just is, and it has a habit of being as such. So I think that is what we're here to do, is bring clarity. It's a fantastic question, and why I believe $96,000 right there, that line that I just very clearly showed you. I do think that there's a high probability that is the low throughout 2026. We also know, as I showed you very clearly, the line below it, we could see all the way down towards 55,000 Bitcoin is cheap. And that is well within our own risk parameters of what could happen. So that's as clear as we get. So what else we got? the crisis, the crisis hotline for sure. Crisis. We're in crisis when that's happening. No question about that. And in those moments, it's the most difficult to make good decisions for a lot of people, which is why having this whole roadmap ahead of time is very important. 60K makes a lot of sense for sometime next year. Okay. If, right. So I don't, I love to entertain every thought. I don't necessarily agree with this analysis whatsoever. Now, like what happens if we enter into a recession, right? And if we enter into a recession, we know Bitcoin's not immune. At that point, could we see something like $60,000? We just saw a major correction on Bitcoin during the April correction over here, and Bitcoin went down to 74,000. The 60,000 seem well out of whack. No, it seems reasonable, right? Especially if equity markets were to go ahead and take out the April low. That would suggest that Bitcoin also would be under that type of pressure. And I could say that yes, I agree with you that that's certainly a possibility. That's certainly within the cards. Why for me the $45,000 number that would break my current structural projections. So anything's possible. I really don't believe that's going to happen or anything like that. Um, it could be, and you could be right, right? Um, so let's keep going over here. But this is great timing for this conversation because we're going to talk about the possibility of a double dip correction and what our expectations are for that. And for sure, I've been like laying out my own macro projections and why I think that actually we have a lot of current. We're going in the direction of the current, and that movement is going to be upwards. Uh, Listen, that's why we track the hard data. We just don't know. It's funny. I saw yesterday or last night. I saw this clip of this guy, and he's like a pretty popular guy out on the web, and he like used to work for Bridgewater. That's the what's his name? The guy who told you to buy China right before it collapsed. Ray Dalio. He used to work for Ray Dalio's hedge fund, the largest hedge fund in the world, and he's like so bearish right now, and I'm like, whoa. Let me check with like this guy, like if he's been bearish before, and then sure enough, I go ahead and I check, and then like first of all, at the bottom, 2022, extreme bearish. Okay, everyone was bearish. Go to 2023, extreme bearish. Go to 2024, extreme bearish. I go to April 5th in 2025 during the correction. He's like, markets never bottom under these circumstances. Here we are today at all-time highs. You have to be very careful about who you're tracking because doom is very attractive. Doom sells. I'm here telling you the markets are not crashing because everyone is always telling you the markets are about to crash, and that is the wrong side. So we developed a meme to help people. The markets are not crashing. They might be correcting, but they're not, and that's very, very helpful. An anomaly would also be a recession. Yes, it would. Like 2008 or worse. Yeah, absolutely. I worry. This morning I was considering, hey, listen, tariffs are inflation. Tariffs are inflationary. Tariffs are a tax. Tariffs are passed on to the consumer, and yet we're seeing CPI not rising yet. We watch. And is that suggesting that disinflation is first of all so strong that it's going to turn into deflation? And are we headed towards what's happening in China over the last few years? That for me is the worst case scenario. I mean, the government is trying right now to do everything they can to migrate that and to grow full boosters. The Fed, who's independent from the U.S. government, they are beholden to their shareholders. They are. I laugh because many of like highly intelligent people, they believe that because there's a board of directors on the Federal Reserve, that the board decides because they vote when they're going to be raising rates on pause or cutting. and they don't think that it's up to the chairman or to whoever the chairman's beholden to. And, you know, guarantee as soon as Powell, if he does cut during his tenure, when he does cut, I guarantee that, or when Powell votes that they should cut, I guarantee that's when the cut comes in. That anyway. Um, I worry about that. That's a legit concern. Could we be entering into a not only a recession? I mean, it would be a recession. I'm going to call it more of a deflationary, like slow motion train wreck. That's that's what keeps me up at night. That would be the worst situation, and that would be very bad for Bitcoin. There's no other way to put it. Now, it doesn't seem right now as we are going from tightening and then moving now towards easing, and central banks across the world in unison are going from tightening to easing. And then, of course, that it's not just the US that needs to roll over $7 trillion in debt, plus another $2 trillion of just spending from the government for the current year, which means, you know, next year another $2 trillion, and not just in the next year for commercial real estate, almost another $1 trillion that needs to. There's a massive amount of debt just in the United States that needs to be rolled over, and worldwide. So does this seem like a moment in time when liquidity is going to be ample, or are we in for a massive depression? You know, and that's why I get like, okay, well, the Fed is independent, they're not playing ball, but like the government is trying everything they could do to like spur growth at this moment, and the Fed is like, yeah, you know, we had no problem cutting before the election, but now that, you know, you won, we're independent, so we're not going to cut again. And anyway, that's definitely something that keeps me up. So we've touched on the crisis hotline 3 times in 6 years. So I have 1, 2, 3. This one above 1, 2, 3, 3, 4, 5, 6 is not the crisis line. This would be expected. There's nothing wrong with this. This one over, like, that's not a crisis line. The crisis line is just below the solid line. Okay. That's what you said 3 times in 6 years. Yeah. 1, 2, 3. See that? I just did it. I thought he said 6 times. He said 3 times in 6 years. See that? Is there a crisis that magnitudes Bitcoin every 2 years? So this was legit bear market for sure. Supply demand dynamics, Bitcoin 4-year cycle halving, throwing in the supply shock. Then you had the macro continuing to line up over here. Is this something that led to, and then the Fed tightening? Finally, monetary policy at that point was dominant. So monetary policy put the brakes on. That led to December 2018, equity markets being under massive pressure, 30% correction on the NASDAQ, right? That was monetary base total over here, beginning to top over here and come down. We're seeing right now things are going in the other direction. That's not happening. Could that be every 2 years? Because 2 years later, you saw a mega crisis. This was the global lockdowns. And then we're able to, you know, continue pretty again over here. This is when monetary base total topped, and they begin with drawing liquidity from the markets. M2 tops way later. M2 tops way later. It's great why it works out, but it's bad if you're trying to time markets. And right now, and unfortunately, it's a lagging indicator. The Fed only publishes the data a month in delay. So we can't use that for our benefit, except a month later, which is not late. M2 is 3 months on average late. So 1 month late, 4 weeks late is a lot better. Right now, everything suggests that the juice is flowing and going to be flowing harder. It doesn't mean that we have to still track where we're wrong. You know that we've been watching the hard data with good reason. It's not softening from where we are right now. So here we are. No, I can't say every 2 years that is going to happen or anything like that. Um, you know, I guess I also have to make an adjustment here from what's going on as we change the dynamic of the cycle. That dynamic is changing obviously and clearly through things like adoption. You could see this really illustrated really well. Public companies now hold 900,000 Bitcoin, up 35% in 1 quarter. That's beautiful. In 1 quarter, up 35%. I don't think I think this trend continues. I don't think that this trend falters. MicroStrategy just had a new offering, right? And I think originally they were trying to raise $500 million, and now that it was so successful, they're up to $2 billion. They're gonna keep accumulating. I don't know what that is. It's another like 16,000 Bitcoin or something like that, you know. And a lot of people are worried about these Bitcoin treasury companies potentially leading to some type of, the way I look at it right now is what we're seeing is a lot of supply demand dynamics playing out, whereas you have people who have been holding Bitcoin for a long time who have seen a lot of price appreciation. They are diversifying out, they are distributing Bitcoin, and it's going into what looks like to me are going to be long-term hodlers. And it looks very healthy from evening out the supply demand dynamics from old coins and people who have held like legends for a long time. And, imagine you weren't having this bid in the markets. Where do you think price would be? And what's interesting about that is when you look at that question, you also have to look at this dynamic over here. You have to say, well, this is why we're leaving facing reality. We're into early majority, and it's based on adoption and the rate of adoption, right? And this is what we're seeing right now. We're seeing adoption continuing to increase. I want to just come back over here as we're talking about supply demand dynamics and briefly touch on MicroStrategy, which at Bitcoin, I mean, Bitcoin just took a hit, right? You could thank Novogratz for that. Mike Novogratz Galaxy selling how much Bitcoin did they sell overnight? A large number. I think I don't have the exact number. I think it's 30,000 Bitcoin Galaxy sold. Bitcoin obviously dumping on exchange as if he couldn't called up Sailor and been like, listen, Mike, Mike, I got a bunch of Bitcoin I want to get rid of. You want to take it OTC? Of course. I got $2 billion here that I'm ready to buy. But he chose to, for whatever reason, right? Maybe he was getting hurt on alts. And he's like, I got it. I don't know what's going on over here, but dumping it on exchange and Bitcoin back down. Check out Bitcoin over though. It still looks to me very much like a bull flag. And it looks to me that we've come in and we've retested what was broken resistance and now holding as support. It looks very good to me. We have this line over here, and that line continues to hold. That line would be, if that's broken, that's a major cause for concern. Except it's a little difficult when it's coming right into support as well. So for that reasons and for those reasons, if I had to give a breakdown level, I'm gonna. This is for all of you guys, just so you know, in case we do. That's the breakdown level I have to give over here, for clarity on confirmation now, because it's getting a little fuzzy, and I just want to go ahead and put this back over here and put down to that line that we had over there. So is that right? Is that wrong? If I get quiet, that means I'm uncertain, and I'm highly uncertain. I'm unfortunately, like you, I usually are too exact in the right place, and that's likely the wrong place. And so what I try to do is give it a little room for where I know for sure that I'm wrong. But it's fuzzy when you look at structure, and you keep going down further, and that point we're just too far away. So sometimes you got to draw a line in the sand and you got to stick to it and manage risk around that. That's what's going on over there. Saylor, obviously, here is ATM and the shareholders, right? And he's just raising money by issuing new stock. That stock has to get absorbed through new purchases. If those purchases weren't taking place, then yeah, the price would be rising. And look, believes, I believe, I haven't had a conversation with him. My own pure conjuncture is that Saylor believes right here at Bitcoin cheap. I think Saylor believes $115,000 Bitcoin is cheap. And if I had my way, I would say to Michael, I would say, listen, that's cheap as far as, the probability that as you move towards, you know, the spring of 2027, you likely won't get the opportunity to buy $115,000 Bitcoin again. But between now and then, I'm not so sure about that. And there's a significant probability that you could. So, but he believes, obviously, just bigger picture, that Bitcoin at these levels, and I don't think he thinks anything different at 150,000 or even 200,000. I think he thinks he wants to buy as much Bitcoin as possible. And later on, MicroStrategy shareholders are going to benefit. That's I think the game he's running. Those that are focused on the near term, well, there's definitely supply being added, which applies pressure to the stock. And in near term, those should be your expectations. Bitcoin makes a massive leg up, strategies following, but then strategy is likely going to be suppressed at those levels. And if you're a long-term player, like, then it works out in your favor. In the short term, I think it's important to have just those expectations. Josh articulates this well. He says the process of distributing newly issued shares generates a cascade of trades. ATM shares account for 100% of the supply newly introduced to the market. ATM supply absorbs demand, which would otherwise create a bid for MicroStrategy and expansion of the net. It's really common sense. It's supply and demand. You're adding more supply. Of course, you're going to need to it's going to suppress price, right? And I mean, to have a study in 2019 talking about supply and demand principles, did you really need a study? It's really common sense. That's what's happening over there. Let's just take a brief look at our equity positions today. We're seeing our current NVIDIA trade continues to hold 22% into open profit. Tesla's on the sidelines. Tesla's bid today. TQQQ continuing to push position, almost 34% into profit. We're looking at FNGU, all right, into big tech earnings coming up, holding right off the back of Google's earnings, finally at break even. MicroStrategy pending close here today. You know what? Just wasn't one that ran so far. Again, we just explained why. That's the dynamic we're in right now. Getting ready to close here, almost at break even, 1%. And at the same time, the spot ETF Bitcoin's up 6%. We see Ethereum here on Mike Novogratz, Galaxy dumping at market a massive amount of Bitcoin, putting pressure out on the market. Ethereum trade, 41% into profit. Solana exiting the market. Solana taking 5% profit. And you could see that. Look at our TA. Our discretionary TA was better. This was where we looked at what would be an exit on Solana. We pushed through over here. We're exiting, just grabbing 5% on that trade, out on the sidelines. And guess what? If we're able to recover, we'll be able to re-enter the market. Also here, from a discretionary standpoint, that looks like where you look to exit on Cardano. My hesitation is this. Look, if we saw that wick down, do you see how that wick continues to hold? We don't spend too much time on that discretionary focus, but if we were, that's a learning experience, and that continues to hold. we're in the trade. We're holding it still 13% into profit. You're looking at what looks like a flag on Bitcoin, also looks like a flag occurring on Ethereum to me. Both looks very positive. Ethereum continues to hold. Bitcoin continues to be here out of the market. And in retrospect, what a nice navigation here of Bitcoin, avoiding a lot of this consolidation inside of a bull flag. Let's move back and get going here. I had to bring up, you have to see gold here is challenging a major trend line. We've had this trend line in place, as if you break it, that's a sell impulse. Look at the price action today. Gold coming right into the support, so far trying to bounce off of it. If that breaks, I think that we see further, obviously, drawdown on gold. Silver looking all right over here under the pressure, still holding at 38. Is that looking toppy on a weekly time frame? That does not, that looks like an ominous chart pattern over here. It looks like a gravestone, and this could be opening up potentially a correction into the metals, one that would be highly welcomed, because in the long run, we are highly bullish on the metals. Ethereum here, you could see continuing here now to just find a rest into support, holding up quite well thus far. We'll continue looking from my standpoint. It looks like Ethereum and Bitcoin are both into bull flags, and which means that they should be able to rise out of them. That's what my expectations are, right? I mean, he should. That would be great, except that he's obviously, you know, he's trying to go about this as methodically and intelligently as possible. I don't understand it. Thank you, Matthias. So I'm trying to there was something here that seems like a strong move to me. Let's break down a little bit further though, just what's going on. I'll move off the weekly to the daily, and you can see over here, this is I guess I'm pausing here in cadence, not because I'm uncertain, just because I needed a little bit of a break. So I think that's structure for me. So this one touch over here, that would be like what I would consider probably a highly probable death blow. And that could take silver back down, into this pocket over here between 32 and 33 and a half. And that would be lovely. And then you could see that, I'm trying. I don't really see well. So would that be the earliest, actually below there? Maybe over here below, right above 37, breaking below this last, breakout, retest, resumption, break support, break the trend line. Below there, likely you see some acceleration. And until then, why it looks ominous, I've seen so many times, and I'm not saying this is going to be one of those times, but I've seen so many times when you get these long wicks, like this previous wick, that looks like a pretty bad weekly chart pattern where you had like the bulls unable to continue defending, bears weren't able to accelerate, but closing lower over here looks like a shooting star. And then you see again, the wick topped up again. The bulls weren't able to do it again. You could see another wick up over here, and it could look like early in the week, next week, or sometime next week, that silver's beginning its ascent again towards 39. It's not uncommon to see a bunch of wicks. I'm looking for an area that I don't know if those are the best. And I'm looking on silver. I've seen it on so many different assets. So I feel it's tricky. And if that happens again, that's the opportunity, I think, if you get it, to lean into it from the best risk to reward standpoint. If you get any type of test up in this area, Nevertheless, if you break down, that looks like a good place. We'll check back in on it. But let's move over. Let's go into what's going on here with the probability of a double dip. To take a look at the data and what history says is the likely outcome. Obviously, a lot of people continue to be very bearish on the markets. And at that point, I mean, I'm looking at the markets and I'm like, we are coming out of this 20% correction at the highest elevated deviation. And anytime in the past, you've seen the markets come out of a 20% correction and hit a new all-time high, well, it's been a pretty good outcome coming into the end of the year. Now, here's the high. So you could say, well, I could say there's only two others that quickly have come out of the all-time high, and you can see it here in 1998, and you can see it here in 2000 and the purple one, 2020. 2020 saw another 23 months, right? I'd say 23. We peaked in November of 2021. I'll say a little less than 2 years before you saw a market peak. And then in 1998, you saw again, March of 2020, a little over 2 years before a market peak. We've talked about the similarities enough that you all have become experts on the similarities between, what happened in 1998 and what's happening now. And then we look at, monetary policy, and the Fed is going from a moment in time where they've been tightening. And as they're tightening, we are looking at markets trading at new all-time highs. They began tightening over here in March 2022. That's when they began their hiking. They began tightening over here in December 2021 when they began tapering QE. Remember our famous tweet looking at the macro, October 16th, 2021. It looks like we're headed for a rate shock. How many of those macro experts were telling you we were headed for a rate shock in 2022? All as I heard in 2024, we've never had such an aggressive rate hiking cycle before. you know and we try our best to be early and be as clear as possible. And Bitcoin was not immune, and sure enough, Bitcoin correcting 76% was not immune. We talked about in 2020 why people were concerned about Tether. The greatest risk to Bitcoin's bull market was it was the Fed and monetary policy. Now we're looking at monetary policy, and Fed continues to tighten and markets continue to rise. And we're talking about and highlighting the difference here between the move from dominant monetary policy to now fiscal dominance. And it's the deficits that matter and maintaining them, and they affect monetary policy. But nevertheless, the Fed is also beginning to turn, and the Fed is moving towards, Powell said, I would have already cut if it wasn't for the uncertainty around the tariffs. And expectations are by the end of this year, there'll be 1 to 2 cuts starting in September. Now, that's variable. They might not cut it all. If the Fed doesn't cut it all, as we've seen, that's been the recent trend, as markets trading at new all-time highs. Fed doesn't cut, likely markets continue much of the same. Fed cuts, it matters if they're cutting into, obviously, you all are experts now, are they cutting into recession or are they cutting into normalization? If they're cutting into a panic, great, we're significantly higher going forward. Here is the Fed cutting into a panic. If they're cutting into a recession, that's bad news bears. And likely we're going to see significant bear market ahead. We're aware of that. It's why we watch the data. But if they're cutting it, here you go. Here was the crisis cut. If they're cutting into normalization, full speed ahead. That's extremely, extremely bullish. And right now, as of today, it looks like they're cutting into normalization when they begin cutting. That's variable. We'll continue watching the data. The data matters. It's why we say and we look out for the hard data. What's happening? Hard data of late has been coming in pretty well. We're looking forward. We have jobs data. That's hard data coming next week. We'll continue to watch it. We have, obviously, we should see August 1st. Do we taco or not? If we don't taco, we continue to watch the path of potential inflation. Over here on true inflation, it looks like it's benign. So far, if we see it rising, we're going to say, all right, Powell was right. Is he right about what happens afterwards? Do we see the deflationary forces then continue to take hold? We look at oil. We say oil. Here's the dollar bouncing off of ACE extended trend line. Not yet anything looking for any type of, what I'm doing over there with my eyes is is that the earliest? We'll check it on Monday. Remind everyone on Monday, we need to take a look at that and figure out what's going on. I'm trying to bounce around here. Oil, again, is not showing that we're going to have any type of inflationary pressures right now. Either is true inflation. That could change. We're watching. The reason I'm bringing that up is that's hard data. Retail, the consumer, that's hard data. So if any of these things begin going the wrong way, and then the Fed's beginning to cut, then we're going to have to pivot to what the market is telling us. Right now, that's not what the market's telling us. What has happened historically after corrections of duration of 20%? Again, as I said earlier, you could see the wicks over here. This is a monthly chart. So you could see that like in April, and I'm just going at because it's just easier to look at over here. Those are all 20% corrections that I've included for you. And you could see that I want to look at the duration in between. Many people are, so here's what history suggests, right? So since 1950, over the last 75 years, the markets have a correction of roughly every 1.85 years of 10%. And once every 4 years, a 20% correction. Now, just because it's once every 4 years, that's on average. There are obviously points in time like from 2009 to 2019 or 18, I should say, December 2018, where there aren't any. So that means that there's going to be other times when those corrections come in much quicker. It's just average. So I want to look at with you and focus on with you historically what has been the quickest time we've had a back-to-back correction of 20% on the markets. I just want to see what this one is over here because I might have missed something and I don't want to. Woo. That's a 20% correction. That's a pretty good eye. And we'll make sure that I didn't miss anything, obviously, right? So there we go. So we'll start with this one. We'll start at the beginning, actually. We see that we went from 2022 to 2025, well over 2 years, right? So then, prior to that, same thing over here. And I'm going to look from not the low. I'm sorry about that. I want to look from when they make a new high. Not from the low, from when they make a new high. So in this case, this is January 2024, and that took us to April of. See, I don't know, how do we do this? What's the most authentic way to do this? So I can't go to when the correction happened because that's the bottom of the correction, right? And if you're down 30%, what of use is that? I think that we have to go from when price makes a new all-time high, and then should we go to when the month takes out a low? I'm not really sure how to do that. And the point of this exercise is very important to me to set my expectations. I could look at something and say, oh, well, there's a 20% correction every 4 years. Well, that doesn't really help me if you have like 6 months of no correction. If you have, almost 10 years of no correction, as far as the average, I need to know what's the soonest. So I'm trying to think about this. And I think the best way would be when you have the repair out until maybe the breakdown. I'm not sure about that either. Is it from the new high until when do you start the breakdown? That's the piece I'm having trouble with. Because if I look over here from the new high, which is February 2024, January 2024, and then I come to where price made a lower low. That's 11 months. 11 months is going to be, out of all of these, the shortest. We've had some pretty short ones over here. You have March of 67, and then you come over here, and I could say that's 2 years. So until I figure out how I'm first going to define that, this one doesn't count. We didn't make a new all-time high. This is during the Great Depression. But since the rally was so significant and we had a 20% correction, I wanted to include them as 20% corrections. But I don't think that works. I'm stuck here a little, y'all. I'm stuck because I don't know how to define the distance between corrections. Because from my standpoint, if I could go between the low to the low, and then we're going to have, a significant time between corrections, December 2018 until March of 2020, but that doesn't do me any good when the market's off 60%. So I'm not sure. And listen, I don't know how more authentic that you can get than that is. I don't know how to define this. And I have to give this some thought, and I have to hear some thought from all of you. I don't know who you find the smart guy. You ask the smart guy. I'm just here figuring it out each and every day. For some reason, I got a strong history of being on the right side time after time, but definitely not the smart guy. I'm just Jordan. So I don't know how to best be able to navigate this from a data-driven perspective about distance between 20% corrections. But I can say, if we were to hit a 20% correction or greater in the next 12 months, that would be on par with the quickest over the last, going back 100 years, 95 years, the quickest 20% correction that's ever occurred. And maybe this time is different. I'm in the camp that this time is not different, and history doesn't suggest any type of radical back-to-back double dip corrections like that. Could be wrong, which is why we make sure to stay on the right side, So we'll do our best. I'm gonna have to come back to this. I can't remember another time where I was so unsure about the correct way to go about this and figure out what's the best way. You know what I'm gonna do, and they're not always the best. I'm gonna go ahead and take some screenshots of this. I'm gonna run it into Grok and ChatGPT and Perplexity and try to get some feedback about how they would interpret that data. I mean, you always have to check the way that any of these LLMs, come to any type of conclusions. But I think that's the way to go about it. So again, right now what we're watching for, markets are at new all-time highs. Everyone's expecting a bear market. Where that's not what history suggests. Now, what history does suggest is if we see a deterioration in data, then we're headed towards an event-driven recession. We have to watch the data as we continually do. History also suggests that if the Fed is cutting into recession, that's bad news bears ahead. Or if they're cutting into normalization, that's super bullish. That's why we're watching the data to find out, is that data deteriorating or is it actually staying? The chairman himself says he thinks that the economy remains pretty resilient and pretty strong. And I think he has a good read there. So it's a little bit difficult just coming from this one presentation that I wanted to be able to go over and share with you. And again, mostly for my edification, which is, I hope, useful to you as well. But I don't have any type of absolute. I need to look at this further over the weekend and figure out, what's the best way we could come to a conclusion of what is the soonest in history over the last 100 years we've ever seen back-to-back 20% corrections. and so I want to come back to this area that we were in. Anyway, that's what I'm going to do going forward. I hope you could appreciate that. It just is hard for me to say. I can't measure it from low to low. That's too late. I mean, of course, we could have some type of buy impulse out and then sell impulse. That might be the best way to do it. So I will try that way. And then the other way I could think of doing it would be from new all-time high. So here's a close one. In 72, you have a new all-time high in April of 1972. And then I would say 1 year later, in April of 73, price is all the way up here. And I'm calling the breakdown. That's, again, that's 1 year. And then you have 1 year over here, price rate making the new all-time high, January 2024. And then you could see, I mean, peaking February. It's 1 year. So 1 year, I would say, has happened twice. There's nothing to say that it couldn't happen sooner. It just would be something is different. That would actually be the first time that it was quicker than 12 months. If giving the most generous way from price making a new all-time high to just beginning to break down. That is the most generous, the most forgiving way I could give, a bull market. I'm not going to go from the bottom to the top or from the bottom to the bottom. It's too late. And honestly, if you're in the camp that this time is not different and we're about to hit the bear market, you actually believe something is different and this time is different. I don't believe that. And, we're far away from any type of breakdown that I could even begin to foresee. Let me go ahead and just take a look at the markets over here. Let's do what we do best and just draw in a bit of. So I'm looking for structure before I look for a simple trend line, right? And since I don't have structure right away, here we go. This is obviously so it's pretty far though. I like being early. I don't like being late. I'm not going to wait for a 20% drawdown in order to say we hit a 20% drawdown. See what I mean? Like a lot of analysts, they're like, "Oh, markets index is correct 20%. That's bear market." I'm like, "You just missed the heart of the bear market. Can't do that, obviously." Come back over, look at an underbelly. Here is what was support into resistance. Resistance, we picked below it. It's not exact. You can see it over here again. That's a lot quicker, right? That would be probably where things were beginning to go south. I think that's a pretty good, de-risk level. Now, of course, every 2 years on average, markets correct 10%. It wouldn't be out of the norm. As we enter into this period that I talked about last Friday, I didn't go ahead and throw that video into the comments, but I meant to. And I think this is one that needs to be watched. And do I think the markets have calmed too far too quickly? And this goes over the seasonalities and what expectations are. Here we are at all-time highs ahead of the August 1st deadline. Markets might be thinking Trump is going to taco out, and he might. And if he does, markets likely are going to respond very favorably and likely continue to be on the top portion of the deviation of seasonalities. If he doesn't and he doubles down, are we going to see some markets under pressure? Likely, that seems reasonable. I'm thinking that I would like to see by the end of September, I would like to see markets be able to resume that strong trend out. Between now and then is a lot of uncertainty. Thanks be to God, we have the way to navigate that with our systematic trading, absolutely keeping us on the right side and profiting alongside the best of the best that's ever been in the markets. That's why we call it conquering the markets. I agree. They don't. Nothing looks like we're seeing some, we looked at yesterday, some type of like elevated exuberance levels, but in the past, when you've seen those levels, exuberance begets exuberance, and I'm not seeing anything that would suggest that the music's about to end. I'm actually seeing a lot that suggests that the music is getting ready to be turned up. We got to navigate the summer, we got to navigate the seasonalities, and then we have a lot further clarification as we move out and we get towards a period of, for example, what are we looking at here? That's cool. That's silver. As we move towards, September, let me find September over here. Here's October, end of September. I mean, you have over here also, for those that are looking to navigate this, like this whole area that we broke out about, this whole area of supply we finally broke about. We want to see the markets hold that. That would be the first breakdown ahead. For those that are hyper early, we like to be the best of the best. As long as we hold this line over here, super, 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 super. There's nothing to suggest right here as markets are trading at new all-time highs that the structure is about to break down. Could there be some type of divergence that I'm not looking at? Potentially. I don't look at divergence, but let me go ahead and check with you. Let me move over towards... So, I mean, are you seeing RSI making lower highs over here and then divergence here? Yes. But then the RSI continued up as price continues up. I don't see anything to read into there. On the monthly here, potentially, you could see divergence taking place. Look over at this past divergence. You see the RSI put in a lower high. This is on the monthly. You saw the lower high over here. This is into the market peak. Now, the RSI was at a significantly elevated level. So here's another one where you see divergence on the RSI. You see the lower high at elevated levels. Markets, I could say they put in that 30% correction. So I think that played out. And then markets continued higher. Higher highs over here. Then you start seeing, after an elevated level, a series of lower lows. I feel like you're reaching. I don't see the RSI even at a nearly elevated level at this particular moment. So again, it's not something that I would factor in, but in taking a look at it, I'm going to say, well, we don't seem to be at a level that's, elevated that would be a cause of concern. And looking good here. All right, everyone. 500K leverage? Never. No leverage. No leverage is needed whatsoever. No leverage is needed. Our returns are too good. We don't need any type. I'll just give you a quick look over here. Like on stocks on the daily time frame, we have our best performers, FNGU. I mean, outperforms crypto. Boom. And our crypto, but TQQQ is our worst performer. And over the last 5 years, you could say that, well, the best of the best, Ed Secoda, the best of the best, able to go ahead and perform. And look at that P&L. That's not up and to the right. That's mostly sideways. He's able to do an average 70% a year. That's what we aim for, 70% a year. That's getting it done. That's our goal. That's our target goal. You can see over here, this is obviously more than 70%. NVIDIA, again, coming back. I mean, 20% drawdown, obviously a little bit more than 70%. This is the IBIT. So you could look at GBTC, which it was modeled on, because it has the history. And again, more than 20%, 70%. FNGU the ticker was just redone. It is our best performer. MicroStrategy was just added. This is just added to the portfolio here to get that Bitcoin like allocation into equities. And Tesla over here, this is coming back from where we start in 2022, 536%. I mean, 70% getting it done. Give it some more time, and you could see that. And then obviously on Bitcoin and crypto, you're gonna have similar type returns. They're coming back to 2020, but you could see the returns are similar to Tesla, to FNGU, to to um Nvidia as they are on Bitcoin and crypto. People love Bitcoin and crypto, and I certainly do. But at the same time, like the stock market gains, you know what? Daily time, very easy to manage. And the one thing about this though is that T triple Q is our worst performer. Our worst performer, 700%. I think that some of the best, here's Ethereum over that time period, ridiculous. Here is the drawdown, very high during Trump's tweet about the strategic reserve. I mean, very high for CTM, no question about that. Solana now buy side only. This is what we do. All right, so yeah, the guys from CTM can answer, but I would say that there's no other better place to be for someone just starting out in the markets or for someone who's been involved in the markets their whole life. That I mean, I feel like what we've been able to accomplish together working as a team is providential. There's no other way that people could come together and be able to produce the work that we've done. It's not normal, obviously, and I think that if anyone is able to, you know, come into the fall, I have to believe that there's a bit of the same that's providential. Yeah, I highly suggest it. Yeah, and we have to finish here, Craig, with Jonathan, and do alts have room to run in them? So here's the thing on alts, and I think it's a great question. And obviously, we were stopped out of Solana. Is Ethereum considered an alt? As a Bitcoiner, to me, it is. Maybe it shouldn't be. It's a different thing. Is it its own thing? If people embrace that, that's cool. I kind of do, but at the same time, it's an alt. An alt is not Bitcoin, but Ethereum is its own thing, and Ethereum is doing its thing right now. And you know, we're still holding Cardano. Alts haven't. We went ahead and we said if we break this line over here, this would be the earliest indication that this current move is coming to an end. I think if we get above here, we're gonna have to go ahead and you can see that that structure is holding. Have to go ahead and I'll continue to give it room right now into the weekend. And we talked about with Bitcoin dominance on the breakdown, ahead of the breakdown, we said, you know what, probably we come into this zone right here. And if we don't, likely we're going much lower. And that's what's be alts breaking out into new all-time highs and really follow through. That didn't happen. We came into the supply, we're bouncing, but my whole belief is that there's a strong possibility we enter into some type of bearish consolidation, and this bounce I think has the potential to make another leg. Now I know that Ben, my friend Ben, just this morning was saying that, you know, he believes sometime around August, September, October, that Bitcoin dominance recovers. I don't know if that means to a new all-time high or if that means towards like 64 or whatever. I don't know. And you know, I'm not so sure. I feel like this was a pretty significant breakdown. This would be recovering, like bearish continuation, breaks out to the upside, new high. If we get any type of major Bitcoin adoption news, such as the Bitcoin Act, Bitcoin dominance going to 70, I think that major FOMO is going to follow that. Outside of that happening anytime soon, I'm not so sure. I think that a lot of people are sidelined. A lot of people are caught up. I'm talking about risk assets in general. I remember, you know, 2023, 2024, hearing the same macro guests on all the podcasts, and they're like, I think equity markets have come too far. I'm waiting for the correction. I'm on the sidelines. A year later, I think equity markets have come too far. I'm on the sidelines. I'm waiting, and markets right now are humming and we're positioned, relatively aggressively. We're not positioned into our swing trading on Bitcoin. We just took a small profit on Solana. We're holding a mega Ethereum trade and we're into Cardano. On stocks, we're positioned across the board except for Tesla. We're riding a wave. I don't know how much longer that wave gets to carry. When momentum fades, we'll be taking profits. But until momentum fades, we're riding. And I think that, I can't, I don't have, I think that the potential is that we can make another leg down, which would be very bullish here for alts. If this breaks down over here, no. If this breaks down, at that point, that's when I would say, oh, this is what Ben is talking about. And then we are going to see Bitcoin dominance here recover towards its highs or to a new cycle high. But until we get the technical breakdown, I'm writing a breakout. And that breakout is still going, right? And we did what? We didn't take it, but we talked about what would be the first aggressive take profit level over here. And price smashed through that. But this trend is still going. And unless we get that's what I said. Like, I have a good macro outlook, but I defer to the technicals. And then at that point in time, this would be the sign of weakening move. This would be sign of probably a major breakdown incoming. And then we'll have to take it from there. Lots of love, everyone. I hope you all I'm so grateful for each and every one of you. God bless you all. Have a wonderful weekend, everyone. Great week here. I started posting these like summary recap videos early in the mornings of our sessions because our sessions are long. It's not for everyone. You got to be able to put the work in and want to learn and want to grow. And not everyone is able to do that or wants to or has the time to do that. And I tried making some summary recaps. They don't seem to be gaining much traction. So we'll see whether or not that continues. We'll just continue showing up and bringing as much value as possible. Everyone, have a beautiful weekend. I'll see you all on Monday. All right, CTM strong.